Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's actually Wednesday, October 11th. Boy, oh boy, where is this year going? It's about 6:54. I'm doing this nice and early so I can rest a little bit. Still, I'm not 100% just yet. I usually do these videos a little later, but for those of you who don't know, I had a stomach bug over the weekend, and I thought it was food poisoning, but it's actually a stomach bug. And while I'm not nauseated to death anymore, I still have zero energy. So I'm going to take it easy today. I will have the VIP room today. Matt is back. I think he and I had the same thing because he had a stomach bug as well. It's the first time I've been out of action for so long in probably a decade. But here we are. And I hope my Telegram messages yesterday kept you guys busy because, boy, oh boy, we were red hot. If you guys haven't subscribed to my Telegram, that's where I give free trades. I think we made 10 points yesterday on day trades. All were winners, 4 or 5 trades. It was a good day. If you don't know how to subscribe while it's still free for just a very little short period, go to rogerscott.com/Telegram. Join our VIP room today at noon and subscribe to my channel. Just go to YouTube and type in Roger-Scott. Yes, -Scott. There's too many Roger Scotts out there, and you'll see me. I apologize if I'm not as sprinty as I usually am, but again, it's been a really nasty few days. Thank God I haven't gotten my wife or my kids sick yet. All right, let's get into it. Boy, oh boy, the market's keeping me focused. Thank God. Thank God I got something to do. All right. The Nasdaq is up about 50 points. This is a little bit beyond random. The Dow is up about 78. Nothing really major. You will see right here, if we look at the bond market is expected to go higher today by almost 2%. That's quite a bit. And that's because the Fed is now backing off raising rates. They're saying it may be enough. We may just have to wait. Let's just see what happens. Ultimately, I think they'll have to raise rates, but for now, they're in a pause zone. And if they're pausing, and if the yield on treasuries weakens or gets weaker, gets smaller, this will be really good for the stock market in general. As far as the type of stocks that have been outperforming the last few sessions, communication. This is why I've been so focused on Meta, Google. Those are communication stocks, tech communication, technology, QQQ. That's where the action has been. Haven't seen much action in healthcare, retail, or anywhere else. Definitely not consumer staples. And consumer discretionary is still lagging quite a bit because economy is not that great for consumer discretionary, but that AI revolution and the whole producers revolution is making it happen. Now, something you need to pay attention to. We have the PPI numbers today. And a bunch of Fed speakers. What we're going to be looking at is, look at that, I already have it highlighted here and everything. We're looking at ex-food and energy and trade services year over year, and we're looking for this number to be below 3. Or ex-food and energy for this number to be 2.1, hopefully not 2.2. It means things are moving slowly, but in the right direction. The annual number looks to be a little higher, but I mean, this is very, very little change. And honestly, I wouldn't really look at the regular number. I like to look at the core number because this is what the Fed looks at. Ex-food and energy and ex-food and energy and trade services. So you want these numbers to go down. You want the producers' price index numbers to go down. Let's talk a little bit about fundamentals, and then I'll get into the technical action. And remember, today's Wednesday. I'm not going to miss a beat. I'm going to give you some long trades and some short trades. And I'm actually got, I got 1, 2, 3, 4 long stocks and 3 short stocks for this morning for you. That's right. Make sure to subscribe to this channel and subscribe to our Telegram channel. Federal Reserve September policy minutes are in focus, gearing up for PPI data. Wall Street, we closed well, 2.5-week high in the Nasdaq, climbed right up to the 50-day moving average. Let's see if we crossed it. It's very, very important to be near the 50-day. Not here, but let's look at the QQQ. Yeah, we're above it. That's very, very important. The question is, will we stay above it right now? But so far, U.S. indices are not looking bad at all. Now, here's where things get really interesting, and I think this has a lot to do with the current global economy, not interest rates in U.S., but what are you going to do, hook them up to a lie detector test? Bostic stated Tuesday that there's no need for the U.S. central banks to continue raising rates. He does not expect a recession ahead. I think that our policy rate is at a sufficient restrictive position to get inflation down to 2%. I don't agree with him, but we are near the end. I actually don't think we need to increase rates anymore. And Bowman acknowledged in a speech Wednesday that the progress made in curbing inflation emphasized that inflation continues to significantly exceed the FOMC 2% target. Oh boy, I wish they get their story straight. She highlighted the robust pace of domestic spending, very, very true, and the persistent labor market tightness, suggesting that the policy rate may need to rise further. I agree with her, and stay restrictive for some time to return inflation to FOMC goals. I don't see any other way, but what do I know? 25% chance that we're going to raise rates in December, 25% and 13% in November, which I don't think is going to happen. Treasuries climbed as rising tension in the Middle East drove investors towards safe havens, but you could see that, matter of fact, overnight right now. Oops, excuse me. It looks like flight to quality is happening. It looks like folks want to invest in bonds. That's good for the stock market. That's not a bad sign for the stock market. Core PPI reading will be very, very closely watched today. We're looking at a year. I don't care what the month-to-month number is. I look at a year, 2.2%, 2.3%, 2.2. We're looking for less than 2.2, 2.3. Europe, they're down a little bit. Disappointing corporate news. And by the way, earnings here on bank stocks starting on Friday. Subdued optimism regarding the outlook of interest rates and Chinese economic stimulus prospects. Luxury stocks underperformed on Wednesday in Europe. China, they're closed slightly higher. They opened again after their week-long holiday a few days ago following a media report suggesting that Beijing is preparing for fresh stimulus measures to support the attainment of this year's official growth target. That would be great. Bloomberg reported on Tuesday that China is contemplating an increase in its budget deficit for 2023 as governments gear up to implement a fresh round of stimulus. I hope that's true because that would give us some tailwind. Nikkei closed at a 2-week high. They're following U.S. Dovish comments from Federal Reserve sparked a rally in chip stocks, which we're seeing here as well. In terms of news, we have HubSpot coming down with a negative report. Expect them to be down. Hewlett-Packard is going to be up a little bit, but nothing really major, nothing really crazy is happening today in terms of Fed data. In terms of sectors, I already told you which ones are strong, which ones are weak, and you could see that nothing really changed over the last few days, except home builders and real estate has been moving higher. They've been moving higher, yes, not too much higher. They're still in the downtrend, but they have been moving higher. QQQ's been doing well. S&P 500's been moving straight up. Healthcare has been moving straight up. That's a sector you want to pay attention to right now. The Dow Jones is moving a little bit higher, but blue chips for the most part, like look at consumer staples. They're not really doing great. Energies I like, and I think energies are going to stay elevated for quite some time. Let me just show you where energies are right now in relationship to the 50-day moving average. They're hitting it. And I'd like to see us break above this level right here. If we break above this level, I think there's a good chance we'll hit the 92 level, especially with the debacle in the Middle East. If not, we're going to back down. Typically, the impact on the stock market from war, and I don't mean to be insensitive, is not really all that great. It lasts a few days, and then things calm down. But in this case, we don't know the impact. We don't know the true impact it'll have on the energy market because we don't know the true players yet in this war. Therefore, I think we're going to stay elevated for the foreseeable future. It would be foolish for us to think that we're not, okay? It would just be foolish. It wouldn't make any sense. As far as sectors that are leading right now, in terms of indexes that are leading right now, the small caps are still at the bottom. The mid caps are a little higher, and the technology is still here. So you could see the flow of money coming in here. You could see that consumer staples and utilities are not getting a lot of love right now because interest rates are higher. But at the same time, they're planning on, because markets are always discounting what's in front of us, the fact that the Fed is saying we may not be raising anymore is really good. Keep your eye on healthcare, because if these three sectors peter out, these three sectors are just one sector. They're the QQQ. And if they peter out, you're going to see some love in healthcare and possibly retail. Now, if retail is going to go higher, then I'm assuming consumer discretionary is going to go higher. Matter of fact, I would assume consumer discretionary would be here because communication technology and QQQ have consumer discretionary in it, but it's not. So right now, Keep an eye on healthcare and see if it starts moving into one of these three spots, okay? Also, keep your eye on the retail sector. It's moving right now. We'll see if it moves enough or just moving to get back down to the downtrend. I'm not expecting too much from the market this morning. Ooh, look at this, bond market. Till after we see what the PPI report is. And that's happening in about an hour and a half. You still have plenty of time, an hour and 20-something minutes. I did this earlier today. That's going to set the tone for today. So after 8:30, keep your eye on the market and keep your eye on the bond market. If the bond market continues moving higher, this will relieve pressure on the U.S. stock market. Now, let me give you some stocks that I'm looking at today. Oops, wrong ticker symbol. And again, I do apologize if I'm not as springy as I usually am. Patek, look at this stock. I mean, my mamma mia, look at this, above the 8-day moving average, above the average. This is a great stock. PetQ. Next stock, CNC. Breaking above the 200-day. Volume is a little bit, leaves a little bit to be desired for it, but I like this price breakout. I like where we're at right now. I like this level right here. I really like this level. So keep an eye on this stock. The second one is BTU. Right here. Notice we're breaking above here. If this takes out this level high, oh boy, we're in business. We just need to take out this level of high right here. And last one, ANF. I've talked about this stock last week. Right here. And I'll have more in my VIP room today. It's breaking out very nicely. It could use a little more volume, but volume is not heavy right now anyway. To the downside, Arrow Electronics. This is a nasty stock. Higher volume going down below the 200-day, below the 8. Everything is lining up. Zebra. Ugh, what a dog. If it breaks this level, it's going to go down. Not crazy about volume. I like Arrow a little better, but also a good choice. And KLIC, which is hold on a second, I think it's a tech stock. Hold on a second, let's see here. Yeah, it is. And tech stocks are doing good. So the fact that this stock is doing bad is actually a really good sign that if chip starts dropping, this will be one of the first ones to go. Volume is starting to move up, and the stock is right at the 8-day EMA. I like this for the short side. I do. I like these stocks to the short side. Now, before I let you go, remember, VIP room is at noon. I may not give you a full hour, but I'll be awake, and Matt will be there as well. Now, folks, a number of Wall Street institutions are projecting shares of Tesla to reach nearly $600 by 2025. Who was day trading Tesla yesterday in the VIP in the room yesterday and giving you guys money as a result? That's well over double what the stock trading for today. But there could be a better way to target the same returns many times over by the time it reaches that level. One of our best traders has uncovered a market irregularity that's specific to shares of Tesla. And when leveraged the right way, it has potentially the ability to pay returns of 100% or more in 6 days or less. In fact, according to his data, it's happened more than 20 times over the last year. Hit the link below and check out the perfect Tesla trade today. Don't miss out. Don't delay. Send me some emails, roger@rogerscott.com. Comment below the YouTube channel. And I'm getting better. I'm not 100% yet, but I am moving in the right direction. Thank you for all the wonderful letters of support. And hopefully this will pass in the next few days. And I'll see you guys later. Bye.